everyone. Welcome to Sessions. It's the second one. And we're so excited, Martin, because before we grill you, Keenan has like, I think, 100 questions already lined up for that. But of course, we want to start off slow, maybe humanize you a bit before we get into this big stature that you have right now. So we found out that behind, the investor, right, behind the operator of large businesses, you are a comic book nerd, and you are a big fan of Peter Parker and Spider-Man.
That's right.
That's
yeah.
right. So tonight is all going to be about Marvel Comics and Spider-Man, guys. Sorry.
Surprise.
No, so it's interesting because Spider-Man has many suits, right? And similarly, pretty much in a short span of time, you've also wear different suits, right? And I guess what I'm very curious about is that what has been consistent or constant, regardless of what suit you're wearing or what role you're playing, what has been something that's true across those different, identities?
I think it's a tough question. To be honest, there's not a lot of constant in all that's change, right? But one of the things that I really anchor on, of course, is why I do this, right? Why I work this hard, and it comes down to really family and trying to build something for a better life for my wife who's here today, for our kids, and of course for myself as well. And that's always been kind of the grounding, kind of motivating factor. So when things get tough or when I'm sort of lost, I think it's helpful to kind of come back to that my personal North Star, right? Every startup, every business should have its North Star. That's mine. Um, Outside of that, I think really just the approach to problem solving, right? Being able to break down problems into something more manageable, and trying to apply a very common framework to how I think about that. And it's the same way I try to guide my founders as well, and when we deploy investments.
I mean, at a very, relatively very young age, you've accomplished so much already. And of course, that doesn't seem to be slowing down. You've welcomed your second child pretty recently also. You're married to a powerhouse herself, an embodiment of women empowerment in Ari Cater, right? Who has led big companies or big startups, including View Philippines and Kumu. So, what's that like, bro? I mean, I don't see Ari as a mellow partner, right? And I can just imagine with all the pressure, right, in your respective careers, what's that like at home? And having balanced that with two kids, because you mentioned that they are your true north, your north star,
Yep.
and you're anchored on that. So what's that like? What's the dynamic like?
So this is one of those things that has definitely changed over time, right? And very fortunate to meet Ari over at Zalora. We both started our career at Zalora, working with Paolo, who's also in the room today. And there's a certain culture that comes with working in startups. I think everyone in the room who's involved in tech or involved in investments probably is familiar with that experience, right? And your team becomes sort of your second family. So that's how Ari, Paolo, and actually Paolo's wife as well, among other couples at Zalora, met and really became close, right? And this dynamic in terms of intense work culture really, I think, worked best because we were all living in it, right? It was not as uncomfortable for somebody working 12 hours a day, 14 hours a day, because my partner was too, right? Or outworking me every step of the way. I think Ari pushes me hard because she's very successful, right? And there's a bit of friendly competition, I guess, amongst us. But there's a drive to better each other, right? And to also try to continue to build great things and great things together. Having kids has changed that quite a bit. There's now a second job at home that you think about just as much, and it's very demanding. People always ask me what the biggest change was, and to be honest, it's really just the way you keep time, right? I remember working in the warehouse. Ninja Van was a 24-hour-a-day job, and sometimes I'd work the night shift and be up all night and whatnot. Now I'm very proud to be in bed at like 9:30 every day in order to be up at 5:30 to get my kid to school, right? So the hardest part recently has been, I think, balancing the demands of work, which is also taking care of things that are in their infancy and trying to help grow those things. But of course, making time for home life as well, taking out time for your kids.
So again, an earlier part of your career, pretty much, you wore the hat or the suit of being an employee, right? Had to grind your way up. working with Paulo also in Zalora, which I guess at the time, right, was also not just a dating place, well, with your partners, but there was a lot of hustle required there, right? And of course, that eventually moved to Ninja Van, and again, being a much bigger operator there. And now you're in 500 Global. Maybe you could talk to us. What's that like? That those shifts, like those changes, and then maybe it's a good way to get into your current role.
Sure. So first of all, I didn't come from a business background before I joined Zalora. I was fortunate to meet Paolo, meet the rest of the team. I was an English major in college. At one time, I thought I wanted to write comic books. Midway through college, realized I wasn't that talented a writer, and found myself with an English degree and no real understanding of how I was going to sustain myself doing that. I remember the summer after college, I thought I would go to China to teach English because it was one of the few jobs at the time that was available to English majors. I linked up with a buddy of mine, and we talked to our parents. And I remember my dad telling me, you guys are idiots. You have no network out there, you have no job. You can't just fly to China and then try to find an English program, right? So I wound up interning for him over the summer, and that's where I got my first introduction to tech and more importantly to marketing. At the time, I was working on driving mobile data sales for Globe, and this was back in the BlackBerry handset days, if you guys can remember BlackBerry handsets. And BlackBerry was interesting because it was the only system, the only smartphone device at the time where you could sell siloed data packs, right? Use case specific internet. So the Philippines was at a very interesting point in its development curve or internet adoption curve, where mobile internet was not really very prevalent, right? There was this fear of knockout load, right? Prepaid users finding that passive push-pull of data was just draining all of the load in their wallets. So being able to sell use case specific data allowed us to really think about what are the most marketable cases for internet businesses, right? What reasons should people be online? And I really enjoyed the cause and effect of that, right? You ideate something, you push it out in the digital environment, and then you begin to see some kind of take up, some kind of return or impact of that. And then you train yourself, you begin to refine your marketing practice and slowly drive take up. I was very fortunate. A team of consultants walked in the door one day from BCG to work on a project with us. And the two lead consultants in that project were actually Brian Koo, who's the former country head of Grab, now CEO of Sarisuki, and Paolo, who's here in the room today. And when they left to start Zalora, I was fortunate to be invited to join them. The big shift there, I think, was in moving to more of a leadership role in marketing. I started out as a buyer. I was a big sneaker fan at the time, and they were kind enough to let me pretend like I knew what I was doing that. Within months, I realized I didn't know what I was doing at all, and I tried to hustle my way back into marketing, doing things like BD. I'm very fortunate again that Paulo gave me an opportunity to run that team after some time, and that was my first real managerial role, right? Managing people, managing a team, and more importantly, managing across different functions within marketing and understanding how that began to ring up to a greater whole. As far as the changes across my career since then, I've always tried to push myself to do something a little bit bigger, right? Either larger in scope, something different in terms of difficulty or challenge. I transitioned to a regional business in Singapore that was focused on VOD. It was actually a corporate venture build by Singtel called Hook. So if any of you guys ever streamed on Hook, thank you. You're one of the few and the proud. But it's a lesson in terms of not all corporate venture builds are built well, right? It was $100 million investment from day one, bankrolled by Singtel, Sony Pictures, and Warner Brothers. And the idea was Singtel for distribution and two of the greatest content producers in the world for this amazing library of content, right? How can we lose? And the reality was the thesis was flawed from day one, right? Many corporates are bad at building startups. They don't have the stomach for losses. At the time, I was running the growth team out there, and I'll never forget this. But within my first 2 weeks at Singtel, I was audited for my vendor selection, and they asked me why I chose Facebook and Google without seeking 3 quotes. And so I wound up giving an intro digital marketing course to my Singtel counterparts and getting them comfortable with what we were doing. But ultimately, the business was had the odds stacked against itself, right? This is also the time that Netflix pushed into global. So we were facing very, very stiff globalization of tech, which was, I think, the first wave of that we experienced in Southeast Asia as well. Managed to meet some great people there and learn quite a bit. I managed to deepen my skill set in the performance marketing space. And I was very fortunate to also encounter the founders of a company called Ninja Van while I was out in Singapore. It was always my ambition to transition back to the Philippines in a CEO or country head capacity, and Ninja Van was really a great opportunity to do that. It solved a visceral problem for me that I remembered from my time as a marketing person at Zalora, where you'd push out a campaign, but as a COD-driven market, if logistics wasn't done in a quality, timely fashion, that affects your acceptance rates. Where there's a direct correlation between speed of logistics service and COD acceptance, and I believe that the technology solution that Ninja Van was building was really well built to address that. So I took the leap, and that wound up being a 6-year run. Probably my longest job to date was with Ninja Van. Very proud to have been the first employee there and brought the solution to the market, and then helped build up the business for the past 6 years, all the way through to our unicorn rounds. And then that really led me to a point where the business was no longer a startup, right? It was a pre-IPO business, still is a pre-IPO business, and the dynamics there of management changed quite a bit, right? You go from being a growth person, doing very dynamic things, and watching the needle move very aggressively from week to week, month to month, to really fine tuning, right, and trying to prevent loss, tighten business practices, improve governance en route to potential listings, right, or potential exits. And I realized that that's not really the operator profile that I enjoyed, right? This isn't what I wasn't having a good time anymore, and I no longer felt I was the right person to lead the business into that next step. An important lesson for me, is to kind of get out of your own way as well, right? If you can no longer add as much value as you're used to or you mean to, then perhaps it's time for you to set the company up for something else. And I'm proud that we built a durable enough organization that Ninja Van still does a great job today. It's still a very large team and very important player in our local logistics ecosystem, and allowed me to transition out very gracefully into my current role. Investment was always something I had some exposure to, more as being part of the ecosystem. Many of us have friends that are founders, and we're fortunate to get deal flow that way. So I was seeing a lot of organic deal flow, and I realized that through this network, there was an opportunity for me to invest into what I thought is what I believe is a very exciting investment ecosystem in the Philippines, and that ultimately led me to try to do something more structured, which brought me to 500 Global.
Yeah, thank you, Martin. Firstly, thanks for being here. I remember when I first asked you in the last event, you quickly said yes. I really appreciate that. And for everyone else tonight, thanks for being here. Well, before we get into 500 Global, I want to ask a few questions about your experience. So during the pandemic, Ninja Van hit a $1 billion valuation, right? What was your biggest lesson operating a company from, I guess, seed all the way up to unicorn, and why? Like, what was the biggest lesson from that experience?
I think the biggest lesson that I took away from that experience was really how the business transitions and how your role as a CEO also has to transition over time. Many of you guys might know Fred Levy, who's currently the CEO of a company called Toki, former chief commercial officer over at Gcash. Few people know this, but Fred is one of our longest tenured entrepreneurs or tech entrepreneurs rather in the country. One of our first e-commerce entrepreneurs with a business called Cash Pinoy. And I remember meeting Fred when I first started Ninja Van and asking him, just his advice and about what the problems were in e-commerce logistics. And he told me about just a general management philosophy that he had. And it was called the toilet paper rule. And the toilet paper rule is that if you as the CEO of an early stage business don't think about putting toilet paper in the bathrooms, nobody will, right? And then you're gonna have a big problem in your hand with your team and all this stuff. And I really took that to heart as far as, it's the CEO's job. In the beginning, it's the CEO's job to do everything, right? You have to cover every part of the business. You're the admin guy, you're the first finance guy, you're the first operations guy, and so on. So when I first started the company, knowing very little about logistics, coming from a marketing background, I literally tried to do every job. And I spent some time in Singapore while I was still based out there working with the Ninja Van guys. I worked the line and I did the driver turn in the mornings where we sorted the parcels and pushed things out. I did warehouse inbound and scanned in all the parcels and watched these guys just move like lightning where I was very confused. And that taught me a lot about my own business, right? Really getting my hands dirty. And it ingrained something in me in terms of culture where I wanted there to be very little distinction between the back office and the operations team. So whenever we would get backlogged, I remember I will always insist that everybody gets their gym shorts on. We're all going down to the warehouse and we're gonna help bail out the ops guys, right? Once we finally started to find product market fit and hit our stride, when we were getting to several thousand parcels a day, I remember the first big campaign where Lazada and Shopee bombed us with a ton of parcels. I think it was around Chinese New Year, and the same instinct came over, right? Hey, we gotta get down to the warehouse. I hired a bus, and we drove everybody down to this warehouse, and everybody the whole day, the finance team, HR, myself, all were sorting parcels. And then it came to the end of the day, and I turned around. We had sorted so many parcels, but there was a line of parcels still out the door. And I looked at my team, and everybody was just wrecked. They're so tired, everybody's back hurts. And I realized that we were, one, taking equipment, scanners and laptops away from the warehouse staff, who was much better at doing this than us, to be frank, much more productive. And then secondly, this team, which needed to address the more structural problems of that backlog, right? Hiring more people, opening new facilities, right? Dealing with the vendors. Now these guys were so tired that they, I couldn't ask them to do more over the weekend. I couldn't ask them to pull extra hours or whatnot, right? And that really crystallized within me that, again, the role of how we have to respond to these challenges has to change, right? The role you play as a CEO has to change. And that's something that's really stuck with me over time, right? You have to recognize the changes in your business. You have to recognize the role that you play and how you add the most value in addressing that problem. And most importantly, addressing those problems in a structural way, not Band-Aid solutions, not one-offs that maybe get you over the hump, but things that legitimately move the business forward, right? And make the business better.
Yeah, that's interesting because some traditional businesses require people to work from the bottom up, right? Some of the most successful companies. And so this is a case where you actually applied that model where someone from the CEO all the way down to entry level has to still pick up the boxes. That's interesting.
I think in some cases it's more cultural. In this case, it's need, right? For most startups, you don't have a choice. You don't have the resourcing, you don't have the capital, right?
Yeah, and so tell me about some of the insights that you've gathered throughout that experience that helped you to become a better investor. So, being an operator is very different from a deployer of capital, right? And most professionals evolve, I don't know if most is the word, but there are a number of professionals who evolve from operator to deployer of capital. Has that made you a better investor?
Better is a strong word in this case for me. I think it's given me a different perspective as an investor. And being in an institutional firm where I have 3 partners who are primarily investors, who come primarily from investment backgrounds, I think that operational background allows me to bring different viewpoints to the table, add value in a different way, right? I think as far as how it has informed how I like to invest or how I look at businesses, one, I strongly dislike being a passive investor, right? I strongly dislike deploying capital and just sort of hoping, being very hands-off, getting relatively limited updates on how the business is doing. I typically try to come in with a clear thesis in terms of how I personally or how our capital will add value, right? How is that capital going to be deployed? Very pointed use of proceeds. And that gives me more comfort because I can immediately project out what kind of value that action will create, right? So whether or not the founder maybe more broadly can deliver on their grand vision or they can deliver on those plans within this round, I know that if I can execute this on behalf of that founder, I have created value, right? The way that I'm used to as an operator. The other component I think is VC is typically very pulled back, right? You typically conduct diligence and founder introductions over one or several meetings, right? Where you don't typically roll your sleeves up too much, particularly at early stage. There's not much to look at. But I think if you spend some time with a founder, understand how they're operating, look at how they manage their team, the dynamics between leaders in a room, those are things that you'll recognize as an operator. And Keenan, I know you're an operator yourself, right? Yeah. So I'm sure those are things you immediately recognize. How does his people defer to his team? What does he count on everybody for, right? A founder may tell a great story, but no one person can deliver incredible outcomes. At least not in a pre-AI world.
Yeah. No, I find that interesting because 500 Global, from what I understand, what I've read, is a seed accelerator and a seed investor, right? And can you tell us more about the seed accelerator model, and that being, I guess, more hands-on than the typical Series A or even seed approach, where you deploy and sit on the board and see what happens, right? So tell us about that.
So Keenan, I think you nailed it. We are primarily a seed investor, right? We are the world's most prolific early stage investor. We're a 2.8 billion AUM fund. We have investments across 80 countries, across 2,800 businesses. In Southeast Asia alone, we've raised 3 funds, and we've deployed into about 400 companies. So it's a very broad-based approach, right? And everything that I've said about wanting to be a hands-on investor does not apply in such a diversified setting, right? It's impossible to have such deep relationships, such deep operating involvement in such a diversified deployment strategy. The Accelerator model, however, is an opportunity to do that, and it's something that's fundamentally different from this heavily diversified investment approach, right? It's much more curated in nature. Startups will typically apply for this program. They'll go through a screening process with a number of our partners in order to be admitted into that program. And if admitted, they'll go through a number of different training programs and be assigned a 500 mentee, right? Typically one of our founders or someone who's worked with the business in the past and has developed certain outcomes. So for first-time founders, I think this is really valuable because you can get exposure to, again, people who've been through this process. They can help you refine your pitch in a way that helps solve for investment. I think a lot of founders aren't necessarily thinking about fundraising or don't want to, and frankly shouldn't have to as much as they do, right? Fundraising doesn't help you run a better business, right? It just helps you attract capital. But I think going through that process allows you to really professionalize how you go about that, right? How you construct your business in a way that is investable, and how you drive towards something that will deliver a financial outcome for your investors.
Okay. Yeah, I find it interesting that the seed accelerator space requires a specific kind of personality, and Paulo Campos knows this being in Kaya, but you're almost like you're a combination of an entrepreneur and an investor to understand what it takes to get from that MVP to market, right? But that said, how do you see the VC landscape here in the Philippines evolving, right? So with the Philippines, most funds now are hitting kind of their midlives, right? And honestly, there's no exit in sight in the next couple of months. We are still at a bottom period. Where do you see this? How do you see VCs evolving and adapting to this new environment?
Yeah, it's a great question. So one of our partners at 500, our founding partner in Southeast Asia, Kai Lee, likes to say winning is a timestamp, right? And it's easy for us to look at the current investment climate and feel quite badly, right? Yeah. We're coming off of probably the strongest run of venture in history, right? The last 10 plus years of zero interest rate environments meant, cheap capital. And venture was was on this pace where you're building all of these incredible businesses at an unprecedented rate in new categories, new segments that no one knew how to price, right? And that was probably one of the biggest problems, is that venture kept patting itself on the back and determining what these category-defining businesses were worth, right? And ultimately, once we came to the liquidity point for those businesses, public equity investors fundamentally disagreed, right? So the primary metric in venture had always been growth at all costs, right? And that's the venture cycle that I cut my teeth in, and what we always learned, right? Rocket Internet is a great example of this, right? Of taking these models, hyper accelerating them, and frankly cloning them into emerging markets, right? These ubiquitous internet use cases that have to exist in every country. We're going to take the Amazons and eBays of the world, and we're going to propagate those in emerging markets, right? And it was a great model at the time. But I think we've largely ticked the box on ubiquitous use cases, right? Things that have to exist in every market. And we've seen what happens in this next cycle where you try to force fit these kinds of models, right? It just doesn't work. If you're not solving a meaningful problem in an emerging market that's somewhat unique, that means something to a market in that country, it's very difficult to create a durable and sustainable business, right? So how this translates back to VC, I think, means that there has to be this mindset shift, right? Investors have to be thinking more about outcomes. I think a lot of investors learned a lesson about not taking money off the table and potentially playing too greedily for returns. We had a lot of investors that held through the early IPO days of our large tech listings, and obviously post-list, those companies haven't really been very performant. So now a lot of these earlier fund vintages are sort of stuck in no man's land where, hey, do we take lower returns now, much lower than the paper markups that we promised our LPs, or do we grit through this and help chart a path to greater returns? But what is that horizon, right? In the Philippines specifically, just to put a more pointed perspective on it, it's still the very early innings of the Philippines ecosystem, right? And I wouldn't count the Philippines out just yet. We certainly haven't had our big winner yet, but there are obviously promising green shoots. Coming out of the early 2020s as well, we saw our first couple of businesses raise their growth equity rounds. Companies like Grocery, Kumu, Sarisuki raised a pretty large Series A. And these are great businesses run by great founders, right? On top of that, you have relatively new players that have been hyper accelerating, and businesses that are built in this new environment with much stronger economic fundamentals. Pickup Coffee is probably the most prominent name in that space. And at the end of the day, it's not a tech business, right? It's a consumer business, consumer brand business. But they've crafted an incredibly potent business model and are building a very interesting consumer brand and disrupting this coffee market by virtue of really price arbitrage, right? Offering the sort of Starbucks-like experience or coffeehouse experience at a much more affordable rate and helping make that experience something that people can consume every day, right? And this is a business that Filipino consumers understand. I believe it's also a business that Filipino public equity investors will also understand. So I think a business like Pickup Coffee could potentially accelerate to become our first unicorn and potentially our first unicorn listing here in the Philippines.
Yeah. Martin, I wanted to ask, because you mentioned again, the past 10 years, there's so many new things, new sectors, new products, new brands, everything. And of course, as Filipinos, we always watch the news or read the news. And we're seeing all these sexy startups, unicorns, the Amazons, and whatever is in Silicon Valley. And we try to, in a sense, replicate or think of an idea or be focused on what's that next idea, big idea or sexy idea. But the reality also is that, again, solving problems, we do have a lot of fundamental problems here in the Philippines. So I'm wondering now, maybe as part of 500 Global, is there a way that you guys, in a sense, can influence also the entrepreneurs or the startups to actually go into these unsexy industries, unsexy businesses? Because it will, for example, agriculture, for example, healthcare. I mean, we're lagging so much. We're so behind, right, from global standards. So what's your role there now? And because Keenan asked about, what's the strategy going to be like? And are you also now pushing that so that there's a new space altogether for these kinds of industries or businesses?
Well, we've talked a little bit about 500 as a platform. My role specifically in the firm is a partner in our growth equity practice, right? The thesis here is that 500, by virtue of being so diversified at seed, is not thematic or sectoral in terms of our investment approach, right? We try to back founders that are doing high impact things and investing into companies that have very, very high potential outcomes, right? When you're low concentration in any one position, you need the potential for any business to be a unicorn or a decacorn in order to generate the kind of return profile that investors expect at seed, right? Given the risk involved. Now, at growth, really the idea is to invest into a much more narrow sleeve of businesses, right? Essentially, can we cherry pick 10 to 15 of the best opportunities within that portfolio of 400 plus companies, right, to reinvest in it growth. So the lens that this gives us, right, is being able to look across all of that data, all those 400 businesses, and start to understand patterns, right? What's emergent and what is performant in this ecosystem, in this market. And Warren, you hit a couple of those on the head, right? Health tech, ag tech are both key themes for us at the firm, where we see performance and things that are very exciting in this, even in this cycle, right? Even in this difficult fundraising cycle. I think in the first stage of the internet economy in any market is about, again, giving people a reason to be online, right? Going back to my first job, right? Why should you pay for the internet, right? Why should you be connected? And for most of us in this room, there's sort of no question, right? We grew up with this. We were connected from day one. Whenever you had a question, you could Google it. But if you can imagine for the next generation of internet users, right? It's not necessarily as intuitive, right? If you're coming online for the first time, how do you use this, right? And how does this add value to my daily life? There's an interesting stat that we studied recently, and it took about 10, 15 years, I think, for the first 2.5 billion people to come online. It took about half that for the next 2.5 billion to come online, right? And that cycle will only continue to compress, right? So the problems, or I guess the kind of businesses that we saw being very successful were Western analogs, right? And the closest thing that we have to a Western analog in our market would be our metros, right? Which are more developed, naturally more affluent, but it's not representative necessarily of the broader population, right? And where a lot of value is being created in our country. So sectors like ag tech, for instance, are, I think, very interesting because these are sectors where our region is potentially more performant or more heavily reliant on than most Western countries, right? Ag tech is in particular something near and dear to my heart because the Philippines is one of the most food insecure countries in the region, right? And it's a shocking thing, right? We have about 25% of our population participating in agriculture. 40% of our land is dedicated to agriculture, but somehow we can't feed ourselves, right? And there's a lot of reasons why. Things like agrarian land reform prevents industrialized farming practices from taking over. But again, this lens as an investor allows us to see incredible business models that are performing. We had one business in Southeast Asia last year that was minted as a unicorn, and fortunately, it was a business in our portfolio. It was a company called e-Fishery. E-Fishery is an aquaculture business that has created automated feeding technology that it embeds in aquaculture ponds. And this solved a very simple problem in the beginning, right? Interestingly, Indonesia is the world's #2 aquaculture market. Right, so it's again something that the region does on a world-class basis, and the founder of this business was a former fish farm owner himself, who felt there had to be a better way in terms of how people were feeding their fish. Right, there's a few problems with the traditional means of just throwing fish into the water, feed into the water rather. One is just the inconvenience of having to perform that action. It's something that can be automated. And secondly, it's something that is not optimized in any way, right? So if fish are not around or if they're not hungry, when you throw that feed into the water, the feed sinks to the bottom of the pond, it rots, it disrupts the pH balance of the pond, it kills your fish, or it affects the yield outcome, right? By deploying this feeder, which is essentially a hamster feeder, the fish swims up, there's a little motion camera at the bottom, and it deploys some feed for that fish, right? But what's interesting about this is they've embedded that motion camera. Now you can begin to build a proprietary data set, right? So using that data, they've been able to model out the yield, predict the yield of these farmers, right? With that yield forecast, they're able to now sell futures on what these farmers are producing, right? And in that way, they've been able to compress supply chain dramatically. So meaning now farmers, through e-Fishery, can sell directly into the export market. You can imagine the margin capture for a business like that, right? And when we're off-taking in that way, I'm also your biggest customer, right? Which means that it's also very easy for me to finance you. It makes it easy for me to sell you things like inputs, right? Because I know what your needs are. And now there are thousands of farms, tens of thousands of farms in Indonesia that are fully reliant on e-Fishery as its technology partner, primary financier, largest customer, input sales, and so on, right? So to me, this is a great example of a very durable business model that has like incredible global potential. And these are technologies that we should be proliferating out here in the Philippines as well, right? Our founders as well should be thinking about these kinds of visceral problems. What are we good at? What is Philippines' natural advantage, right? We had a sort of wave of this in the early 2000s in the form of BPO, right? Philippines are great at customer care. We speak better unaccented English than almost any other non-English speaking country, right? Or non-primary English speaking country. And that was a massive opportunity for us, right? In terms of call center, customer care, document transcription, technical outsourcing. Now that business is being challenged, right? By AI and generative AI. Right? So that advantage is being taken away. And I haven't heard enough founders, frankly, that are thinking about BPO transition and how we can participate in that as a country, right? And activate this workforce.
So yeah, let's talk about e-Fishery because it's interesting. Eric Manluna's Wavemaker participated in that as well. I don't know if they did it in 2018. I think you guys invested in 2018, right? So about 6 years ago. Yeah. Why haven't we developed our own e-Fishery, right? Like, or why hasn't e-Fishery expanded into the Philippines with the abundance that we have of agriculture, right? The offering we have in Mindanao, NCR. I mean, you name it. We have all the agriculture that needs to be bridged to the consumer, and even aquaculture for that matter. So why hasn't that happened here in your view?
Yeah, so let me try to tackle both halves of that question, Keenan. The first being, why don't we have more founders participating in this way? It's a question I ask myself a lot, to be honest, and I'm not sure that there's a straightforward answer. I think one of our biggest problems in the Philippines startup ecosystem, frankly, is volume, right? We don't have enough founders, right? And part of that has to do with the kind of systemic factors around being a founder in this market, right? Historically, we've been undercapitalized. There hadn't been great access to seed capital or pre-seed capital outside of the angel community in this market. Thankfully, we now have more institutionalized, structured early-stage funds in the market, firms like Kaya, Foxmont, Gentry, and so on. And I think that has helped kind of galvanize a portion of the community. Most of us were probably participating in the early 2020, 2021, coming out of the pandemic, where there was this exuberance, right? There was this idea that Indonesia is so overmarked, capital's looking for an outlet valve, Philippines will be the next big thing. And I remember I'd seen more deal flow in that year than I had ever seen in the Philippines, right? And it was so exciting. I really felt like we were about to turn a corner. Of course, the fundraising market started to tighten up, and then all of that founder participation dried up, right? And I don't think we've seen founders coming back for a second bite, frankly. And that's very damaging, right? It's very, very damaging because typically founders don't hit it out of the park on the first try, right? Many of our most successful founders are second-time founders. So I think we as a community need to obviously do more in terms of activating and helping engender these ideas. It's a big part of why I like doing these kinds of talks and participating to help bring these ideas and open that discussion around these kinds of visceral problems to be solved. To answer the other question, as far as why a business like e-Fishery is not here in the Philippines yet, they have their own strategic reasons why. In that country list of top 10 performing aquaculture markets, Philippines is further down, right? We're market number 6 or 7, I believe. So e-Fishery has recently expanded to India, and this is a fundamentally different market than Indonesia, as you can imagine. And any founder in this room that's done international expansion will recognize the challenge of operating, fighting a two-front war, if you will, right? And having to localize your business into these two very dramatically large markets. And I have a lot of respect for this approach, right? The discipline to not take, your massive $200 million round and say, boom, we're in every market in Southeast Asia. That was the order of the day in the mid-2010s, right? Where in order to be investable in Southeast Asia, you had to be regional. You couldn't just be one country, except unless you were very potent in Indonesia, right? So I think that's one component is really just business focus. The other is there's an interesting kind of geographic makeup in the Philippines that actually makes us less than ideal for a business like e-Fishery. You mentioned having ample land for agriculture and a lot of participation. You're right, but those properties are typically concentrated in our extremes, right? Far north, far south, right? And supply chain, logistics, the segment that I came in from, is still fundamentally broken when it comes to ag. I remember I had a conversation with Secretary Kiko when he was still in his role as head of Frabel, and he was telling me about some of the challenges. One of which is that it's actually cheaper for him to import fish from Vietnam than it is to truck it up from Mindanao, which is shocking. Right?
Most commodities.
Yes, yeah. So most commodities as well, right? And that creates a huge problem. Secondly, interestingly, Indonesia is laid out east-west as a country, right? Whereas Philippines is laid out north-south. The relevance of this is that this is a region that's very exposed to inclement weather, right, and extreme weather. And when typhoons break on Indonesia, they typically hit eastern Indonesia, and then those typhoons will slow down. Once they reach the middle part of Indonesia, it's not as damaging. In the Philippines, where do typhoons cross, right? Always across central Philippines, southern Luzon. And when those farms get hit, they lose between 80 to 100% of their yield every single time. So it makes it very, very hard for these farmers to find their footing. And as a result, we don't have a very rich farmed aquaculture segment. In fact, most of our aquaculture is driven by seaweed production.
Yeah, so I guess, talking about Indonesia, I remember, was that 2018, right? People saw Indonesia as kind of the crystal ball that the Philippines would soon follow. Coffee groups popped up, Kopi Kapangan.
Yep.
And that thesis proved correct now with Pickup Coffee. But there was a huge reset during the pandemic, right? And the Philippines didn't really feel that reset because we never blossomed, right? So do you see us as like in the beginning of an inflection point, or you see some time before we hit the scale that Indonesia hit in its kind of heyday, right? That's, yeah.
I think it's hard to be especially optimistic about the Philippines in the very, very near term, right? Like I said, I think it's still very much the early innings for our market. I think we're starting to see the green shoots of what had developed in Indonesia that engendered such a potent startup ecosystem, right? One of those things, again, is the investment community. Capital leads venture in a large way, right? Because these businesses are inherently risky, right? You can't find you can't source capital in the way that a normal business would. So having that presence, having that investor interest, both domestically as well as regionally, I think is sort of stepping stone number one. Equally importantly, we're seeing much stronger participation from our conglomerates, right, and our large corporates here in the Philippines. Having those partnerships, having that strong backing, I think provides another layer of strategic advantage that was very present in those early innings in Indonesia, right? 2013, 2014, when things were beginning to boom, right? Many of these large family offices, large corporates were LPs in these VC firms, if not operating a VC firm of their own through CVC or through traditional venture. The other rail that I think is very important here is government participation. And I think this particular administration has been trying to do its part as far as making it a little bit easier to do business in the Philippines. But we haven't really been an entrepreneur-friendly market for a long time, right? And I've seen this from friends, from colleagues who always tell me, I didn't know how expensive it was to fail here, right? The costs associated with closing a business are significantly more expensive than the cost of opening a business, right? So there's this massive disincentive to be an entrepreneur in our market, and it's crazy, right? When you think about the kind of programming as well that the government tries to put out, I think there's a lot of the right thinking as far as what they want to do to support the startup community. But putting that in practice is so far has not really been as successful as we would have liked, right? We don't have enough government participation in terms of venture investment. Outside of NDC, I think Anton's here as well, and one of our only investment stalwarts in the government side at the moment. It's viewed as too inherently risky an asset class for most of our government firms, and that's fair. If you're dealing with people's pensions and things like this, you have to be a responsible allocator. But at the same time, if the government wants to build a robust ecosystem, I think we have to do our part and participate in being active deployers, potentially in later stage venture.
No, that's interesting you say that. I actually wanted to bring up a line from an article in the Economist today. This Economist had an article about the Philippines, and a very positive one, that is, with some drawbacks. But there was a line that said, from someone in the World Bank, said, returns on investment in physical and digital infrastructure in the Philippines are higher than in neighboring countries because the gaps are huge. Yeah. That last statement, the gaps are huge. That's the arbitrage, right? But to capture that, one needs to go through all the red tape. I'm not here to generalize, but I mean the red tape and ease of doing business, right? But that also creates an arbitrage. So if you can navigate that, I guess that's what you're trying to say, that there's still that opportunity if one.
By right, any kind of scale venture business was never meant to be easy, right? Yeah. If it was easy, it would have been done by now. And it's the companies that, again, can identify the right problems to be solved, execute well, that will reap those rewards, right? And we haven't yet built that first Philippine unicorn. It's another thing that I guess we're missing in this ecosystem is that lack of something to play for, right? When the downside is so significant, what is the upside, right? And no founder in the Philippines, unfortunately, has truly realized that yet, right? I think Coins is probably our most successful cash exit in the market, right? And absolute great job by Ron and his team. Incredible business. It's still going. But at the end of the day, we still haven't realized the kind of ceiling outcomes that we've seen in markets like Indonesia, right? Giving some people something to play for.
So, could I ask one more, Warren? And so I guess let's move towards kind of portfolio management and DD as opposed to the macro view. But so from a portfolio management, how do you discuss opportunities with your partners, and how do you manage disagreements, right? And there's some managers that say, if it's 100% agreed, they don't pursue. I think Ben Horowitz said this, right? He said, when all my VC managers agree on something, we don't pursue it. Everyone has to fight for a deal because there's a sense of contrarianism there. How does your team decide and agree on investments, and how do you pursue contrarianism, not for the sake of it, but to think differently, to generate that alpha?
Yeah, I think that idea of contrarianism in an IC setting, let's say, is important, but sometimes it's very academic, right? You may really like a business, but I agree, somebody should speak up and try to poke holes. And at least in the dynamic I have, and I'll speak maybe more from the family office perspective, where we're actively deploying, but I try to play that role, right, of poking holes in the business, right? Why won't this work, right? And it's important to have that conversation, I think, with your co-investors, right? Because if you're only focused on the upside, then obviously you're going to miss quite a few things as far as where the risks are. Even more importantly, you're probably missing things that you have to then help the business with, right? Things that are probably not obvious to the founder, right? founders have to be inherently optimistic, right, to do this, right? Just because the odds are stacked so heavily against you, right? Venture is such a high mortality business, right? 90+% failure rate. So if you're not an optimist as a founder, you're probably going to have a very, very difficult life, right? Because you'll be pessimistic into the ground. But if you as an investor can help identify those potholes on behalf of your investees, obviously you can help them navigate those challenges in a much more effective way. You can also ensure that the limited resource pool that you have, right, whatever funding that you have, can be used to either address those gaps, make you stronger en route to your next fundraise or en route to your final liquidity outcome, and really a better partner, right? I think every founder should have a cheerleader on their board, but you also need to have those people that will tell it to you like it is, right? And if everyone is just saying you're doing a great job, obviously you're gonna miss all the things under the hood that are broken.
I mean, you're an operator first, primarily, right? And Keenan mentioned, having a contrarian perspective, or how do you manage those kinds of discussions? Keenan is finance investor first, and now an operator, right? So how different is that spectrum, and what kind of conversations do you have? That you mentioned being as a founder, you are naturally optimistic, right? And also now, as an operator, are you naturally optimistic now when it comes to deploying capital for these new ventures?
So in all honesty, I don't think of myself as a founder. I've never actually founded anything. I started an event here in the Philippines, but it was an extension of an existing business. I was able to take tack and a business thesis coming from somebody else and help realize that ambition, and I think relatively successfully. I generally think of myself as a fairly pessimistic person, to be honest, and that keeps me fairly grounded. It also keeps me hungry. It makes me, it gives me the sort of drive to try to work and cover those gaps. If I don't feel comfortable with something, then it makes me work extra hard to ensure that I can give myself that comfort, right? And I think that's sort of translated to how I invest. But I actually think that I've transitioned into being more optimistic as a venture investor, right? Because you have to believe in the idealized versions of these companies, right? What they can become. What does the billion-dollar version of this outcome look like, right? So when you think about a company and we think about venture, the role that venture plays in most people's portfolios, right? It's not your secure returner, right? Venture is illiquid. It's a long-term asset typically. And as a result, the returns have to be very, very significant, right? Your IRRs are materially higher than that of PE or traditional asset classes to justify that risk and illiquidity, right? So with every deal that we look at, I want that business to play a role in our portfolio, in 500, right? That this company could be, again, a $1 billion company, a $10 billion company. And if I can't chart a realistic path to that, right? Whether or not that, it may be a 5% chance, a 1% chance, right? But there has to be that viability, that this model has that kind of potential and has that kind of market size, right? So, naturally you have to put on your optimistic hat and think about the business in that way. And I think there's a couple of guys in the team that are extremely, extremely good at this, right? About helping even founders understand, no. The way bigger opportunity is actually in something adjacent or something you can build on top of what you've already built, right? I'll go back to the e-Fishery example since I talked about that model quite a bit. But the big business here isn't selling e-feeders, right? It's not selling these units. It's in the financing, the offtake, right? Which are multi-billion-dollar categories in this segment.
So so going back to contrarianism, I want to dive deeper into this because it's fascinating that the fat tails are always seen through the lens of a contrarian viewpoint, right? So I want to go back to a question that Peter Thiel asks, right? From the book 0 to 1. He asks, what important truth do very few people agree with you on? So to put it another way, do you have a high contrarian view of the world that very few people agree with you on? You don't have to answer it, but it's just, I'm just curious if there's something that bugs you, even within your committee as a group that the rest of the world kind of overlooks.
I suppose if there's like one sector that there's maybe a few sectors in Southeast Asia that I've never really understood. As far as I understand the investment attractiveness behind this, but I've never been able to be optimistic about, if you will, right? One of those is this idea of SME SaaS in this region, right? I don't think it's ever really been realized, particularly when it comes to modernizing trade, right? These like micro retailers, our sari stores, the warungs in Indonesia, and this is largely played out in this way, right? And the reality is these are businesses that I think venture has always tried to force feed tech, right? Oh, there's so many of these guys, it's a huge market that process so much in payment volume that if we can just get them to do a little bit more, then these are big companies. But the reality is, I think we've largely been selling products these guys don't want or need, right? They're satisfied running the business that they run. It's too complicated to overlay tech and add infrastructure into those environments. That hasn't really panned out. The other play that I think has been very challenging is this idea of digital banking in our ecosystem, right? And we have a lot of neobanks. Apologies to any neobank founders in the room today. It's just a phenomenally tough business to build, right? And I think it's also something of a disservice to our corporates, right? These
Highly regulatory.
Yeah, very regulatory, very capital intensive, right? And this is one of those categories where you've seen, I think, venture dollars misused, right? I remember this very buzzy, high interest rate environment of hey, 6% depository interest rates for everyone, right? And when you are raising so much in deposits, you're forced to deploy those in loans. When you have no database advantage in terms of how to underwrite those loans, guess what? You're dealing with a massively high NPL book, right? And we saw some incredible NPL numbers coming out of this wave, right? So businesses burning through tens, hundreds of millions of dollars in some cases, right? Trying to educate themselves on how to run a performant loan business, right? But it's very backwards, right? It's easy to draw those deposits. It's much harder to deploy the loans.
Yeah. No, it's interesting. We were in a group discussion with other angel investors and fund managers, very smart guys. And someone asked the question, what's the difference between an online bank and a digital bank? Nobody could answer. And so we had to investigate. And still it was unclear. I mean, there are registration requirements, but the functionality, would you say, of a digital bank and an online bank, which is tied to brick and mortar, quite similar. I'm still waiting for that answer, by the way. So, so that's an interesting contrarian view. Do you have any questions? Yeah. So I guess before we end this and give a chance to the rest to ask questions, I wanted to ask, and if you could share with the crowd, a single book, if you read, that kind of influenced you, and if not, any publications that you recommend to entrepreneurs trying to just build their knowledge.
Yeah, one of the first books that I was fortunate to read when I transitioned into an investment role was called The Power Law by Sebastian Mallaby, and it's a fantastic book. It's essentially a history book on venture, and you get to see the development of the venture ecosystem from the perspective of the earliest venture capitalists, from Arthur Rock in the Liberation Capital days, all the way through to the China boom that was sort of the beginning of the 2010s and so on. And this was very foundational in terms of shaping my thinking as an investor, because I always just thought about the business, right? Running NinjaVet for 6 years, I basically had my head in a hole for that entire time, just trying to make the business a little bit better every day and drive towards a certain outcome. I think not enough founders are thinking about what it takes to make your business investable, right? And how to make your business most attractive to investors. Even just this idea that a lot of founders complain, why can't I get funding, right? Why won't somebody back me? Again, the reality is it's such a high mortality rate business that everyone in venture is trying to hit a home run every single time, right? And if your business isn't a big enough home run, or you can't envision what that home run is, then it's not investable it shouldn't be a venture business, frankly.
Yeah, I mean, again, we have a mix of attendees here tonight. Some have their startups already, some are considering of starting their own, or like having the courage, right, to go through that idea to make it a reality. Are there any like practical tools in terms of, because not everybody has the academic background or the network, right? Some have, I guess, more humble beginnings, right, or maybe an insecurity in that matter. Are there any recommendations from you on how they could speed up also, or build their confidence towards realizing that idea?
So first of all, I don't have any formal business training, to be totally honest, right? I don't have an MBA. I didn't go to business school or study business in undergrad. I learned by doing, right? By participating, alongside really great operators, really great founders. And I think that's the best way to learn, right? Is by participating in the ecosystem. I don't think it's fair to sort of be a tourist or to show up and then expect that you deserve to be funded or you deserve to be successful in the space, right? At NinjaVan, we ran a very high attrition hiring model, primarily because I couldn't get experienced industry vets to work for me, right? And this is the problem you're trying to solve, Warren, right? Of helping bridge corporate into startups. I remember I called experienced logistics professionals from all different companies and said, hey, do you want to try to disrupt this industry and do things with tech? Either they were bringing too traditional a mindset, wanting to solve the problem the same way they're already solving it, or they weren't willing to trade down in terms of quality of life, in terms of salary, right, to risk something early stage. So instead, I hired the smartest young kids I could find, typically fresh college grads who were doing something boring. I gave them a ton of responsibility, and we created a ton of internal competition, right? And we had a lot of people who couldn't deal with that lifestyle, the work intensity, the competition, and the pressure. But the ones that did ultimately went on to become very, very successful. We're very proud. We had one kid who went on to apply for HBS and got in. We have a couple of founders in that group, many of whom are now unit heads or team heads or C-suite execs in other businesses. So that's the best training ground to me, right? Is really challenging yourself, working alongside other high-performing people in a high-performing setting. Challenge yourself to do something big. And to start developing those theses, right? What is a visceral problem that you want to solve, something that deserves to be solved. It has the kind of market ceiling that again makes it a $1 billion potential outcome.